It's a new trading week, and as always, they say proper preparation prevents poor performance. One thing I've noticed with my students in Godlove University is they still suffer a lot from risks and money management. Trust me, when it comes to Forex trading, I don't care whatsoever you've watched on the internet, I don't care whatsoever strategy you are using. If one concept is missing, which is the concept of risk and money management, you're not going to be profitable. That's why one of my favorite quotes from Warren Buffett, who is one of the most successful investors out there, says, it's not how much you make when you are right, but how much you lose when you are wrong. So capital preservation and risk management is very crucial when it comes to trading. So in this video today, I'm going to be focusing on two techniques that you can use to manage your money like the pro. Two techniques that you can use to manage risks as a Forex trader, as a pro Forex trader. These are tips I've been using for the past 10 years to trade the Forex market. These are tips you'll be able to see the top 1% of traders using. So before we go into the video, if you're watching me for the first time, my name is Ndemazeah Godlove. On this channel, I share tips on trading, personal finance, and tips to help you stay profitable on a consistent basis. So if this is your first time watching, or if you've been watching and you haven't subscribed, smash that subscribe button below to subscribe to the channel so that anytime I update awesome content like this, you'll be notified. All right? And again, with my 10 years of experience, I'm going to be showing you guys exactly what is working for me. All right? Now, when it comes to risk management in trading, we have two methods we can use. The first method is already predefining your risks and just using the tools I'm going to show you guys. And another method is using the dollar amount, okay? Predefining your risks and then using the method I'm going to show you now. Or another method is just using the dollar amount. That's strictly money management, all right? Risk and money management. So let's start with risk management, where I'm just going to come here on, I'm going to start with this first currency pair. Just the first currency pair on my table here, we have gold. Gold obviously is XAU USD, right? And I'm just going to be using this first one because that's the first currency pair we are seeing here, and we already had a signal on that currency pair, right? Good. So assuming we were using a strategy like GUMVRO, it means, I'm just going to quickly show you guys, it means since this is an uptrend, we have plotted our FIPS from here to here, and you already see the market push right down to our 38% level and close bullish somewhere here, all right? So this would have been our buy signal right here. That's why not all the trades are going to go your way. So if you follow your plan and whatsoever outcome that comes out, you don't need to blame yourself because that would have been a potential buy signal, right? Although the market is currently pushing against us, but it would have still been safe because your stop loss would have still been somewhere down here. Good. So assuming this would have been a buy signal right here, it means we would have entered on a buy right here. Long position would have been by the close of this candle. I guess you guys already know this strategy because I'm not teaching you guys GUMVRO. The strategy is already on this particular channel, almost about 1 hour. So if you want the detailed strategy, just check my page, just check for GUMVRO, and you're going to see the detailed strategy, right? So my stop loss would have been somewhere here on around, let's see, on around 100 pips, and then I go for about 200 pips. Just something like this. Risk to reward of 1:2. Yes, that's 1:2. That's it. That would have been a potential trade, all right? Now, when it comes to risk management, what lot size will I use on this trade so that I can only risk a particular percentage of my account? Because you need to already predefine your risk. So to know the exact lot size we're going to be using on this particular trade so that we can only risk a particular percentage of our account, we need 4 things. All right, let me just put here as text so that you guys can see. Point number 1, we need to know the account size. The account size. All right, please make sure you pay attention. We need to know the account size. We need to know the percentage risks. The percentage risks. How many percent of your account do you want to risk? We need to know the lot size in pips. All right, we need to know the lot size in pips. And what again? Account size, percentage risks, lot size in pips. There's one thing that is lacking, and then the currency pair. Currency pair. That's it. It can be in any order, but these are the 4 things you need to be able to calculate your risk. Now, since we are using this gold example, we're going to be our currency pair is going to be XAU USD, and assuming we are trading on a $100,000 pro firm account, no, stop loss in pips. Stop loss in pips. This one is stop loss in pips. Sorry, this one is stop loss. Stop loss in pips. So what was our stop loss in pips again? 100 pips. And what is our percentage risk? We want to only risk 1% of our account. And what is our account size? Assuming we have a $100,000 account. All right. So that's our account size, $100,000. So we have these four things. We can easily calculate the lot size we're going to use on this particular trade, so that if the trade doesn't go our way, we're only going to be losing 1% of our account. Full stop. We don't want to lose 1% of our account. We are looking for the lot size so that if the trade doesn't go our way, we're only going to be losing 1% of our account. So the website we're going to be using, you can just go to godloveuniversity.com and then you check position size calculator. It's right there, free for you guys to use. So let's just go to Godlove University. All right, there are many websites you can use, but this is a very easy one for you guys to use. So just go to Godlove University and then click on position size calculator. All right, position size calculator, and you'll be able to easily calculate. So I just come here, trading calculator is right there, trading calculator, and then we just need to fill in the tools. Remember, we already have everything here. We just need to fill in everything we have here, and we'll be able to calculate our risks. So position here is, let's see, what's our position here again. Let's go. So you come here, line on Godlove. Okay, this one is a click here to have access to this. So most of the time, you just click there, just put your, let me just put Ndemazeah. It's a free tool, so you don't need to pay anything. Godlove@gmail.com. That's it. Click on continue. Okay, let's prosper together back to site. Good, that's it. So here, when you come here, click on position size in pips, all right? And then you just scroll down to XAUUSD. XAUUSD is right there. The account balance is 100,000. Currency is USD. We're risking 1% of our account. Stop loss is 100 pips. So that's it. Make sure you click on position size in pips, and then you just click on calculate. Perfect. So amount at risk, $1,000. Position sizing, 1 lot. So we're going to be using 1 lot size on this particular trade. So this is when you just go back to your trading or to your MetaTrader 5, and then you just put the lot size, you put 1, click on buy, and then you just go on modify, you put your stop loss, 100 pips, and then if you are going for a risk to reward or 1:2, it means your take profit is obviously going to be 200 pips. If you are going for a risk to reward or 1:3, it means your take profit is obviously going to be 300 pips. As easy as that. So this is the first method where you predefine your risks before you get into any trade. Then you're going to be using this method and this particular free tool. Just go to, I'm going to leave the link of this particular trading calculator on the video description, all right? So just check the link on the video description, and it's going to take you to this free trading calculator that you can use to calculate any asset at any time. It's totally for free, all right? Then the second method is when you use a dollar amount. Some people already know that, okay, since I'm having my $100,000 account, at any point in time, I don't want to risk more than $1,000. So they already know that in mind, and maybe they have a fixed lot size that they use. I don't normally recommend this one, but I see some people, they use it that way. Because this one, you don't predefine your risk. You're just using a dollar amount. So I'm going to quickly share my screen just to quickly show you guys that method, right? So I have this free account right here, or I have this demo account, and I'm going to be using this for the purpose of this video to show you guys again. So on this particular account, let's just assume we have a $100,000 account. Let me put my recording on so that you guys can see clearly. Okay, so let's assume we have a $100,000, right? And you want to only risk 1% of your account. You already know 1% of your account is $1,000. This is the same currency pair we're talking about, which is gold, all right? So on gold, we want to only risk 1% of our account, which is $1,000. And you already know that, okay, since it's a $100,000 account, I normally use 1 lot size on all my trade. Those are people who use constant lot sizes on all their trade. Or maybe I use 2 lot sizes on all my trade, or I use 0.5 lot size on all my trade. So let's just assume you're someone who uses 1 lot size on all your trades, right? Then you just come here, you put there 1 lot size, click on buy. All right, if I check here, that's already a buy. All right, this is just a demo account for the purpose of this video. Now, we need to now set our stop loss and our take profit. You just go back there, you touch the trade itself. When you touch the trade, you can see down here we have TP and we have stop loss. If I touch stop loss, this is TP and I'm taking it up. I want to target $2,000. $2,000, that is it. And then I just drag stop loss right down. I want to risk 1%, $1,000. Boom, that's it. You can see that's my stop loss, that's my take profit, and boom. You can see, so if I just click here, go to modify, voila, perfect. So you see, we now have a stop loss in place, we have a take profit in place. That's it. For someone who already know, okay, I use one lot size on all my trade. You do the same thing. Let's go to another currency pair on our list, which let's just take Euro USD, which is one of the most traded currencies, right? And I'm just going to do the same thing on Euro USD. On Euro USD, if you are using a strategy like GU MVRO, I can already see a signal which is going to be forming as soon as we have our bullish candle close very soon. So let's just assume I want to be jumping in now because I'm entering on this pullback. And on Euro USD, I normally use 2 lot size on all my trade. I go on buy. All right, click on buy. Let me see. That's it, buy. And then I just go back to the chart. Just touch on the price. Touch on where you buy. Just touch where you see buy to. Just click on that price. Down here we have TP. You click on TP. I'm going to be going for $2,000 again. $2,000 is going to be somewhere. Let's go up again. All right, that's $2,000. That's $2,000. And then we touch again. So we touch again, and then we go for stop loss and TP. So that's our stop loss. We're going to be risking $1,000. And our take profit, we're going to be going for $2,000. That's it. You click on this, modify, boom. Those are all our trades. This is our first trade, stop loss, take profit. Our second trade is this one, which we can see. Let's go to chart, stop loss, take profit. As awesome as that. You don't need to do anything. You don't need to change anything. Everything is already there. Very, very visible for you guys to see. So those are the 2 methods you can use to calculate your risks. Remember, this method I don't normally advise because now you are not entering, you are not putting your stop loss based on market structure. If you are using the one which I just showed you guys using the website, obviously you're going to be using the market structure to say that, okay, if I had a swing low somewhere here, then my stop loss can go here. If I had a swing high somewhere here, my stop loss can go here. But this one where you are not using any swing in the market to calculate your stop loss or your take profit, you are just using a dollar amount, you wouldn't actually be using price action or that market structure to calculate your loss side. But it works for some people. All right, that's why I'm showing you guys all the method. Meaning, even if you want to calculate your loss size this way, there's a way you can still do it. And even if you use the first method, you can always come back to your phone to do reverse psychology to confirm if everything is correct. You can always come back to your phone. You just touch on the price because when you buy on your computer, you can still see on your phone. So you just come on your phone, you touch on the price, just touch those 2 lines where if you see buy or sell, just touch on the lines. When you touch on the line, you obviously, your TP and your stop loss will automatically just appear. Meaning, even if you want to manage your risks on your phone, you can still drag it, just drag it up and down and confirm. Or you can still just shift it below or up if it's your TP or stop loss. And then you just click on modify, boom. That's one of the easiest. At first, I think about 2-3 years, we didn't have this option on mobile. We didn't have this option on mobile. This option only came on mobile last year, which is very, very awesome. Very, very awesome. And you can easily manage your trade. Look at the free trades we just took. They're all in profit. But that is it. We're just taking this one for the sake of the video. And as soon as we have some more ideas concerning what you guys have always asked on my video description, I used to always come here to share with you guys. So let me know which method you use to calculate your risks on the comment section. But as always, I'll always recommend method number 1. All right, I'll always recommend method number 1 where you go through the risk calculator, the trading calculator to actually calculate your risks. And like I said, this tool is 100% for free. You don't need to pay to use it. You don't need to pay any person to use this particular tool. Just click the link on the video description. It's as easy as that. It's going to take you to Godlove University. And you're going to just click on Trading Calculator. And talking about Godlove University, that's an institution where I'll personally mentor you one-on-one. So if you want me to mentor you, if you want me to train you, take you from A to Z, show you in my 10 years of experience exactly what's working in the Forex market with no BS, then check out the link on the video description, which is still on Godlove University or just click on courses and you'll be able to enroll in my full mentorship and become my mentee. Check out Patrex Pro, which has won 3 years in a row as the most profitable and the most viral Forex robot. And if you're looking for my recommended prop firms or recommended brokers, make sure you're using recommended brokers that will be able to pay you if you make the money. So check the link below to also use my recommended broker. And talking about my community, make sure you are in my free Telegram community so that I can always give you guys updates on what is coming, on what we should be watching in the market. So check the link on the video description as well to also join my free Telegram community. If you didn't understand the GUMVR strategy and you're hearing for the first time, click this link to be able to watch the full video on the GUMVR. Also check out this playlist, which are videos I've prepared for you guys, and I'll see you guys on these other videos. Peace.